CreditEnable is really a technology-enabled marketplace where we sit in the middle of a series of high-profile lenders on one side, and we work with borrowers on the other, and we effectively work to ensure that credit flows seamlessly from borrower to lender. And what we are differentiated and how we are differentiated really from other marketplaces is that we are a managed marketplace. So we source leads from various sources, from our business partners, from direct to customer, which is through our social media platforms, and our strategic partnerships that we have with various e-commerce companies, trade associations, etc., etc. And then we do the credit assessment, whereby we make sure we take the banks the right credit and have the loans dispersed. We ensure for lenders that they get the right sort of leads, and for the borrowers, we ensure that we provide them with the right guidance to ensure that they are able to access a loan. If they are not able to because of a poor score or something, we work with the banks to get them loans. If not, then we manage them to a point where they will be eligible for a loan in the future. With respect to our team, we have a highly capable team with over 100 years of experience across technology, credit, SME segment, etc. And we have a very strong global advisory board, which has a combination of bankers as well as financial institutions. So with that, I'll just spend a little bit of time talking about what has really changed in the last 3 months, and what this will be, what this does for us in the future from a lending standpoint. I mean, if you look at the impact, so there's certain things we know and certain things we don't know. So what we know is clearly this is a global impact for our for the world, more than the world wars have actually happened. I think it's impacted everyone. There's clearly a global recession underway, which we are hoping that we will overcome very quickly. There's constantly this health versus economy debate, which is raging around when to open up the economy. And I'm happy to see that India is opening up now. We're seeing economic activity build up in green zones and also in non-green zones. So there's a positive happening there. Despite the migration of the labor force, things are opening up, and we are actually seeing it through the requirement for loans as well as the willingness of banks to lend now. The focus clearly going forward is going to be on contactless lending because of the current corona situation. I think both lenders and borrowers are concerned about their health. So lenders are working towards processes which make the whole process for them and their customers digital, whether it is intermediaries or it is the end borrower or end lender. Everything is moving to a contactless situation. Clearly, the world has changed, but then to the point about the downturn, how long it's going to last, clearly the answer is unclear. When we speak with banks, banks have now started opening for business, as they have said, on the 1st of June or in June is where banks have committed to opening up. And I would say when I use the word committed, I mean actually internally opening up for business. I think there's clearly a sign that things are thawing. Whether it's going to be a U-shaped recovery or V-shaped recovery, who knows? But the good thing is the economy is now moving. What we see, which is happening in the digital lending space, and what we see happening going forward, is what the payments business actually did which happened as a result of demonetization in 2016, where there was a ninefold increase in payment transactions when you compare 2014 to 2018. For digital lending, clearly I see the same trajectory. And while people have talked about digital, I think there were certain aspects within the digital journey which were not clearly digitized, which was making the process very tedious, whether it is KYC, NACH, e-sign, etc. All that is dramatically improving and changing and becoming far more digital. And I think once that all happens, the behavioral change that is happening at the borrower side as well as the lender side will make this more of a regular phenomenon. So questions relating to the new normal, I think the big thing is to embrace the digital mindset. It's here to stay. Your customer experience will be far better if you are digital. You will be able to operate as a non-digital player, but clearly you will be losing out versus your competition, as well as with respect to how you manage your business and the efficiencies. What is the real benefit of digital lending? In my view, it's really transparency on pricing. I think right now what is happening is, there's one lender that is catering to one borrower for his primary needs. What we are going to see going forward is that sometimes the borrower is not getting the best bang for his buck because he's got so used to his lending relationship. Via digital lending, you're able to get far more transparency and be able to avail of the best deal possible. I mean, I think with us having about 20 lenders on our platform, we can clearly see the certain aggression certain lenders will have versus others. Secured loans versus unsecured. Right now in the market, we're seeing unsecured loans are happening in the market, at least getting sanctioned. With the secured loans, because there's a lot of interdependencies around having to get, third-party valuation done, etc., depending on location, that may pose some challenges, but we are already seeing that thawing. Some of our lenders are already engaging with their third-party agencies to get them to start doing valuations. Looking at traditional lenders versus fintech, clearly I have talked about this. We're going to see a plugging of the digital gaps where, there's certain processes, like I mentioned, eNACH, etc. Those will all get plugged and become digital in our view. Traditional lenders are also getting faster on this take. I mean, you're seeing a lot of talk about eKYC being a big sort of push. Lending is thawing and banks are engaging in new loans. So what we are actually doing with our borrowers and lenders, so we have launched this We Move Forward campaign where we are providing a stability score in addition to what we do for our borrowers from providing them loans. We're providing digital tools for our lenders to actually do their assessment on themselves and figure out whether they need to make some changes in the way they are operating, both from a supply chain standpoint, from a customer facing standpoint, inventory management, etc., etc. Because we have a lot of strategic partnerships within e-commerce, outside of e-commerce, we can see that you need to be prepared. The turnaround could happen faster than before, than expected. We're seeing some leaders in the FMCG segment saying that because right now there's a lot of destocking that has happened, manufacturing is really going to pick up for FMCG because stock needs to be fulfilled. So people in the supply chain really need to be ready, and financing is a critical part of that. And then just to summarize from what I've said, clearly the world has actually changed. I think we all really need to adapt to the new scenario of lending and just working in a digital environment.